an exciting time in the Brisbane industrial market right now. We're seeing unprecedented levels of activity and demand across the board from tenants, owner-occupiers and investors alike. To start with, investors have now had over 2 years of living in the post-COVID new norm, and investors the world over are now well aware of the resilience of industrial property as an asset class. With the spotlight on industrial, we're seeing further compression of yields as investors continue to compete for fewer and fewer assets on the market, pushing yields into the 6% range and sometimes even into the 5s for blue chip assets on long-term leases. Many of our investors are making the decision to capitalise on these market conditions by taking a defensive position, divesting out of these assets at these lean yields, with a view of buying back into the market in a year or two's time when interest rates increase, yields follow, and there are better buying opportunities in the market. Owner-occupiers, who are often also competing with investors, are becoming more willing to compromise on certain factors if the site satisfies the key requirements of the business. For tenants, we've seen a significant net absorption of space across all sizes over the last 2 years. And more recently, we're seeing an increase in rental rates and a decrease in incentives. Our agents are also securing more deals at full asking price and often above asking price when the ideal property is found for an owner-occupier due to the limited stock available on the market. Whilst the pandemic has caused many issues for supply chain management and international trade, the flow-on effects of the pandemic has largely been a boon for local industry. Many industries have recorded some level of growth and remain active in the marketplace. Most notably are the distribution and logistics businesses off the back of a dramatic increase in online shopping. And the exceptions to this would be the tourism, travel and event management businesses who are still hampered by COVID-related restrictions. This of course depends on your personal circumstances and portfolio mix. However, if you do have the ability to wait, consider selling now to capitalise on these peak market conditions and very tight yields. Then, when the market corrects in 12 to 24 months' time, you'll be in prime position to acquire better quality assets at better returns.